Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading, but more specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. So because of that, I do a couple of things. The first one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open create an opportunity. And the opportunity is for traders that can identify a specific price where these stocks will first be drawn to like a magnet, and secondly, have a price reaction from in the other direction. In the course, traders learn everything they need to know in order to be successful to trade the gaps. They learn how to calculate these price levels. They learn which stocks it works the best with, what are the criteria we're looking for, and that's only the beginning. The second strategy in the course is known as the gap fill strategy. When stocks do gap higher or lower at the open, they leave what's called an open gap. At some point in the future, those open gaps will be filled. That creates another possible trade or another tradable opportunity. In the course, traders learn how to track them, and they also learn how to trade them. Not all trades are created equal. Therefore, not all gap fill trades are opportunities. We have to understand how the stock comes in to fill the gap will determine whether or not it's a high probability trade or not. All these things are discussed in great detail in the course at Lazy Gap Trader. Traders get step-by-step instructions on both the morning gap trades and the gap fill trades. The second thing I do is I give traders an opportunity to get my gap trade sent to them each and every day at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out this morning to traders. As you can see, it arrived at 8:55 a.m. That's Eastern Standard Time. And this morning, we had 7 potential gap trades on the board. Now, each and every day, I give what opportunities exist based on the pre-market trading activity. Not all the stocks are going to hit the specific levels that we're interested to take a trade at. We're only interested to take the high probability trades. When a stock comes into the level that we calculate, that's a high probability trade. Therefore, that's an opportunity that we want. So we're going to take a look at the charts of the stocks that did hit their price levels today and go over them in detail, because today there's going to be a couple of nice, interesting lessons that all traders can benefit from. The first one on the list, Hertz Global, HTZ, gap lower, support levels are $21.28, $20.30, and $19.25. Stop and profit target is about 18 to 35 cents. I give multiple support levels on these stocks because each trade is handled independently of each other. Therefore, all these levels should produce a price reaction in the other direction. The second one was Equifax, and this is our second trade in just a few days on EFX. We had a really great trade the other day, and here today we had another whopper. We're going to go over this one in detail. And pay attention here because I say gap lower, support levels are $91.72 and $90.73. Stop and profit target is about 50 cents to $1.30. Now, what I say here is these support levels are close together, and this stock is volatile. Traders can take a partial position at the first level and add if it reaches the second level. The first level is not a traditional calculation. However, either of these price levels should provide support for a snapback should EFX reach there today. Now, the stock was opening much higher than these levels, so that's why I said if it would reach there today. When I give a detailed explanation like this, what I'm trying to say in so many words to my traders is these are very good support areas. We're going to get the price reaction we're looking for, and we're probably going to get a whole lot more than that. We'll go over this trade in detail. Avis Budget, or CAR, it missed its level by about 11 cents. That happens. It's a little frustrating. We can chalk that up to the front runners, but it did not hit the $34.91 level. It came up just above $35 a share, and therefore I, for one, did not get into this trade. But it did have a nice rally off that level nonetheless. BZUN did not hit its level. THC did not hit its level. I am going to go over HALO. I say gap higher, resistance levels are 17.18 and 18.26. Stop and profit target is 18 cents to 35. Now, it didn't hit my level, but I'm going to go over this stock anyway because it did hit a level that my traders who have taken the course were able to calculate, and I'll explain more when we get to the chart. And then the last one, United Natural Foods, UNFI, gap higher. Resistance levels are $40.86 and $42.19, and then I gave a third level as well. Stop and profit target is about 30 to 55 cents. We'll go over this trade also. Before we go over to the charts, you should also know that each and every morning I give a list of gap fill trades. These are stocks that once were morning gap trades that ultimately will come back to fill these gaps. Thus far today, none of these stocks have filled their gaps, but we did have a couple of gap fill trades yesterday. I just wanted to show you the list. What I'm doing for traders is I'm providing them opportunity. I provide the morning gap trade opportunities, and I provide a list of potential gap fill trade opportunities. Let's go over to the charts. Of course, we have to start with the chart of EFX because it was a whopper of a trade. What I want to point out is when you look at the stock from last Friday when it had the big initial fall on some really bad news in Equifax, we were in that trade. We got a very nice trade out of it. There's a video of this trade posted on YouTube, but I just want to point out that we went back to the well today as the stock was continuing to fall. I was waiting for this level to get here, and today they handed it to us on a silver platter. I'm going to go down to a shorter time frame and show you exactly what happened. Remember from the morning email, the two levels were $91.72 and $90.73. Both levels produced wonderful trades. You can see where the stock is now. It's at $97.88, and you have to realize the stock closed yesterday at $98.99. Traded all the way down today and all the way back up. It was a nice round tripper. Here we're on a 1 minute chart, and you'll see what happened. Just 12 minutes into the trading day, the stock came into the 91.72 level, making a low of 91.26, well within our stop loss limitation. And then just a few minutes later, the stock was already at a high of 93.94. That's a nice win in just a few minutes of trading. Then the stock came all the way back down and it hit the $90.73 level. Let me go back to a bigger time frame. You can see what happened. This is where the stock found low for the day and it rocketed out of this territory, providing the snapback we were looking for. Already today, the stock has made a high of $99.70 from the $90.73 second level given out 30 minutes before the market even opened for business. That's about a $9 gain in this stock in just one trading day, and significantly less than just one trading day. It was within the morning session. Now, in the course, I teach traders how to take a trade like this and turn part of it into a risk-free, emotionless trade. In the course, there's an entire video module that teaches traders how to take certain amount of profit along the way and let the rest ride, which turns a trade like this into a risk-free, emotionless trade, allowing traders to squeeze the most profit possible out of this trade. So instead of just getting 75 cents or $1 or $1.50 out of a trade like this, traders could get $3, $4, $5, $7, $8 out of a trade like this if they're trailing the stop appropriately. All that's taught in the course at Lazy Gap Trader. Net, folks, this was a home run trade, and we get these more often than people would believe. And I want to make mention of why traders have a certain comfort level in taking a trade that's actually getting creamed where most people would be running for the hills. Because in the course, traders learn exactly why these price levels work. Once they understand why these price levels work, that's what gives them an added confidence in order to take these trades. They understand the significance of these price levels, and then they understand why these these stocks should have a price reaction in the other direction. Next trade from the email this morning was Hertz Global. The stock closed yesterday at $23.93, gapping lower at the open. It opened at $22.55 and traded lower. Now, this trade wasn't as cut and dry as the other one. This one did not come into the 21.28 price level like we would have preferred it to. So based on what's taught in the course, many traders wouldn't have taken this trade, and that's okay. Anybody that's taken my course understands that this type of action above the price level changes the probabilities of the trade. It changes the odds of success. However, any way you look at it, the price level did work. The stock got a bounce off $21.28. As you can see, already making a high of $21.75. That's a very nice scalp/day trade. And whether you took this trade or not, this goes to show you the power of these price levels that work over and over and over again. Traders learn exactly why this stock came into 21.28 and why it got a bounce from 21.28. The next one I want to look at is HALO. Now, my level from the email this morning was higher. It was $17.18. The stock never got there. However, the reason I have the line or a dotted line at 16.11 was because this is another price level that traders who have taken my course were able to identify and may have, in fact, some did take the trade at this level. They shorted the stock at $16.11. Now, the stock closed yesterday all the way down just above $13 a share. It was gapping significantly higher at the open. And the reason why I didn't take the 16.11, nor did I recommend the 16.11 to my traders is, these biotech stocks can be wild. Sometimes you get what I like to call panic buying, which is also short covering, and therefore, I like to go slightly higher with these type of stocks that are more volatile by nature. Doesn't mean the 16.11 wasn't going to work. It's just that when I put the email out in the morning, these are the price levels that I am willing to trade the stock at. Traders can obviously make their own decisions. I'm giving you what my preference is and the price levels that I'm willing to put my capital at risk and where I'm willing to make the trade. And this one, for me, I was not willing to take the 16.11, although some traders were and some traders did. The last one we'll look at is United Natural Foods, UNFI. The level identified in the email was $40.86. The stock closed yesterday at $37.20, gapping higher at the open, and unfortunately, this one traded higher than the stop loss limitation. Therefore, traders, including myself, were stopped out of this trade if you abide by the stops, even though the stock did come back down and made a low of $40.09, providing a very nice pullback. However, it did go a little higher than we would have liked it, and that's just trading, folks. We don't win 100% of the trades. Nobody does. That's an impossibility. But I want to show you the good, the bad, and the ugly, and because I put this one out to my subscribers this morning, I have to own it. I got stopped out. It is what it is. We just don't win 100% of the time, but what I can tell you is we win most of the time. This is a strategy that you can use for the rest of your trading career. If you want to learn everything you need to know in order to trade the gaps successfully, then come over to check out the course at lazygaptrader.com, because you don't want to miss out on the trades like EFX, where we get enormous winners, multiple dollar gains in just a matter of hours, not days, not weeks, not months, but hours. And in this case, you can even boil it down to minutes. Traders, this is a strategy that you can use each and every day for the rest of your trading career. I'm David Frost, lazygaptrader.com. Thanks for tuning in.